All right, good morning and welcome to the October 2025 Director's Cut. Before we get started, I'd like to offer a couple thank yous to the team here. First and foremost, I want to thank the field teams that work hard every day, and mine at Williston and Dickinson. Thank you to those teams for your great efforts. I'd also like to acknowledge the technical team that worked on the Development Incentive Well program recently. We saw our first applications for that. That was a legislative statute that came out in the last session, and we put together a technical team to work on that, and the technical team did an incredible job working through the first couple applications. So I want to acknowledge that group. And then there's also been a large team led by Mark Bohr, just to my right over here, working on rulemaking, and that's been a significant undertaking for the agency lately, and I wanted to take a moment to thank that group. Today's Director's Cut will be given by myself and Justin Kringstad with the North Dakota Pipeline Authority. I want to point out that the October Director's Cut covers August production. So diving into August production, just a little bit deeper, we can see that the production for the month was 35,757,872 barrels, or 1.15 million barrels per day. July's numbers were just slightly over 36 million barrels for the month, or 1.16 million barrels per day. You can see that we are down just a little bit from July to August by about 10,000 barrels per day, and 0.30% above revenue forecast, which is 1.15 million barrels per day. You can see that on the graph. The revenue forecast is denoted in the dashed line. The total state production is in the black line, and as you can tell, there is a slight decline in production over this 2-year graph. The total Bakken barrels are in they're at 1.12 million barrels per day in the green, denoted with the green line. Statewide gas production is at 3.55 BCF per day for the month of August. The state produced 110 BCF for the month. July was essentially the same at about 110.3 BCF. So down just a little bit July from July to August. In the upper right-hand corner, you'll see the total statewide production is heavily weighted towards the Bakken at 97.4%, and about 89% of the producing wells are Bakken wells. Taking a look at the top 10 counties by total oil production, McKenzie County continues to lead that at 11.1 million barrels per month, followed by Williams, Dunn, Mount Trail, and Divide are the top 5 oil-producing counties in the state. Those counties make up 96.2% of all North Dakota oil production. Taking a look at the rig count, this is rig count by state and basin. Total U.S. rig count is at 548. September was right at 542. It's important to note that about 43% of the rigs are in the state of Texas. Taking a look at the North Dakota rig count trend, we're currently at 28 rigs. September was at 27, August at 29, and July at 29 as well. So relatively steady. In the lower left graph, you can see that the Permian Basin, which is both the Texas and New Mexico side of that basin, is at 251 rigs. That's roughly half the rigs in the country are running in that area. Williston Basin, you can see, has 30. That includes the 2 rigs that are over in Montana at this time, along with the 28 that are in North Dakota. There's 37 rigs running in the Northeast United States. That's the Utica Shale and the Marcellus Shale dry gas play that's active over there. Taking a look at the graph of states over time, you can see the North Dakota rig count 27. U.S. rig count increased to 529, so just a slight increase September to October. And the blue line right in the middle is the Texas rig count, and that had a slight decrease at 237 rigs. Taking a look at that by basin, again, 529 rigs in the United States. The Williston Basin rig count it shows 30 down at the bottom, 29 down at the bottom. I'm sorry, it shows 30. It remains consistent month over month. Permian Basin rig count decreased slightly from 254 in September to 251 currently. Taking a look at pricing and activity levels, this has been an interesting story over the last several days. Let's take a look at Henry Hub gas price, currently right in the $3.30 range. WTI oil is at roughly 61, 66 or $62 a barrel. You can see the North Dakota market in August was at 58.08. So we still, I'm sure Justin will show his differential slide here in a little while. And so we're still pretty consistent on the differential. The revenue forecast on pricing is again denoted by the gray dotted line in the background. So dipped just below the revenue forecast for the state. I wouldn't say it's anything alarming at this point. Activity level, you can see the North Dakota rig count at 28 there in the purple line on the bottom graph, and then the frac crew count, which has been steady, which is a very good thing on the bottom at 13. Oil price has been highly volatile, and the main reason for that is the oversupply and recent tariffs on two Russian companies. Speaking to that just a little bit more, last week we had oil in the $57, $56 range. Almost immediately upon announcement of tariffs on Rosneft and Lukoil, the two largest Russian oil companies, oil price went up above 60, and that's where we're at today. There's also quite a few other geopolitical factors going on. Europe has sanctioned Russian refineries. There's been a number of takeouts of Russian refineries by the Ukraine. All of this aimed to help end the war between Russia and the Ukraine. So, moving on to permits and completions, you can see the permit trend in the upper right-hand corner remains consistent. September had 95, August 90, and July at 99. Completion trends are down just a little bit. September had 56, August 88, July 77. We'll continue to watch this. The wells waiting on completion rose, and so I do believe that the DUC count, or the drilled but uncompleted count in the state, is not in any. It's in a healthy place, probably in that 300 to 350 range, and we'll continue to monitor the completion trend in the state. Looking at extended reach permits, we've approved 1,161 3-mile lateral permits in the state, 82 4-mile lateral permits. So those continue to increase. 8 of those have been completed. In our odd-shaped lateral permits, we have 18 U-shaped lateral permits that we've approved, and 2 J-shaped permits. So the trend continues for longer laterals and what we would call U-shaped wells. Taking a look at cycle times, you can see the spud to stimulation, which is the blue line, continues to decrease. That's at approximately 115 days. That just shows operational efficiencies and improved cycle times from spud to stimulation. The orange line is your stimulation to first production line. Although it's relatively steady, you could see a slight decline in that, but it stands at roughly 50 days. I think last month was 60. So we continue to see operational efficiencies from operators by looking at both of these trends. Taking a look at the total well count, that stands at 19,606, an all-time high. The total number of inactive wells remains right in that 2,200 range. That includes inactive and abandoned wells. I do think that this has remained high for the last 3 months because of potentially curtailed production on wells due to lower pricing that we've seen recently. Taking a look at completed footage over time, there's nothing really new on this graph. I would say the total completed length in thousands of feet is represented by the blue bars. The completions in the state is represented by the black line. And that when you divide those two numbers out, you end up with your estimated average lateral length completed by year, which you see in the right. And as the year goes on, this number updates, so we really won't have a good updated number until early 2026 for for the 2025 calendar year. Looking at lateral lengths over time, the total percentage of 2-mile laterals is approximately 65% right now. 3-mile lateral, and that's represented with the blue line. The total number of 3-mile laterals is represented with the orange line, and you can see that is on the rise at roughly 35%. And right on the bottom, you can see the green line. That's our 4-mile lateral development, and that lags significantly, but it's more recent, and we continue to see an increase in permit applications and spacing units for 4-mile laterals. And then the way that the DMR has chosen to categorize those is in the lower right-hand corner, and you can see that. Taking a look at FBIR activity, you have August oil production at 146,596 barrels, a slight decrease of about 4.5%, or about 6,900 barrels. July production was at 153,000 barrels per day. Their rig count is up just a little bit, which is a positive. That's at 3 currently. You have 127 active permits, and the number of active wells is increased slightly to 3,005. I want to acknowledge a recent meeting that we had with MHA Nation on FBIR. Chairman Fox and his team graciously hosted several state leaders. We look forward to continued work with MHA Nation in the future. Looking at gas capture, the volume from July to August decreased by about 4 million per day to 163.8 million. The statewide gas capture increased to 95.4%. You can see the table in the lower right-hand corner. Statewide is at 95.4, Bakken 95.7, and then you can see the breakout of FBIR and non-FBIR. So overall, the gas capture in the state is positive. And with that, I think I'll turn it over to Justin Kringstad for his report, and I'll come back for questions when he is complete. Thank you.
Well, good morning, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into some production updates from our neighboring states in the Williston Basin. Eastern Montana really locked in there, 79,600 plus barrels per day now, consistent for several months. So I think it's fair to say with 2 rigs active over there, that's a number to keep their volumes relatively steady. 0 rigs active on that South Dakota side of the border, and really just consistent, relatively low numbers in that southern portion of the play. The one thing we'll point out here, nothing too exciting to point out on the oil and natural gas changes month to month, but that natural gas ratio to crude oil has hit another record 3.08 for the month of August. So that trend certainly continues. We will see ups and downs here in the near term, but long term, that trend is expected to continue to move upwards. No major shifts structurally on the Williston Basin oil movements out of the basin on average. You will see when you start looking at this over time, we have seen over the last several months a slight downward trend in the amount of oil leaving on our pipeline network, and a little bit of an uptick in those rail movements. And so we've gone from a pretty steady period of roughly 2 unit trains per day leaving the Williston Basin loaded. We're not quite at 3, but north of probably 2.5 unit trains of oil loaded per day. So that's somewhere right in that 180, 190,000 barrels per day. And the destination for those barrels largely is that Pacific Northwest. They've got a very strong appetite for light sweet barrels. That Bakken barrel works very, very well. There is rail connectivity to those facilities. And so structurally, I don't think we'll see any major shifts. I don't know how much higher it could grow, but at this time, it's been relatively steady now for several months, right around that 180,000 barrel per day range. When we look at the prices influencing some of those decisions, and even what's taking place back here in North Dakota, we'll look at Pad 5, that discussion on the rail movements, very strong pricing over there, highest in the nation as far as what refiners were paying on average in the month of July, which is our latest. We look at Pad 2, which is the Midwest region and the Gulf. I know last month we reported some strong wellhead pricing, this could be a factor in that. Just one of those pieces to what makes up the overall, Western North Dakota wellhead price. But look at that difference between Pad 2 and Pad 3, the Gulf Coast area, very, very small. That's a pretty small delta. Historically, over time, you would have noticed a larger spread between what Midwest refiners are paying versus the Gulf Coast. So that's, I think, one of those factors when people ask, why we saw a bit of a bump in pricing. When we look at where the market was at the kind of the close of yesterday, it's gone up slightly since then. Clearbrook pricing still in the negative territory at negative 65 cents for that our most local pricing hub. Brent WTI spread still north of $4. That's been relatively consistent, so I'm not expecting any major changes there as well. And that WTI Houston premium has been relatively steady as well, just shy of $1 there. That discount, we saw that improvement in July. That was a noticeable jump. It's come off slightly from that in August, just over $6 discount to that WTI marker. That's still better than what we saw through the first half of the year. So I'm hopeful that this trend will continue. But when we look at some of the market dynamics, during those summer months, July, August, there was very strong refinery runs. We've seen some refinery maintenance and refinery utilization in the Midwest pull back from that. Latest EIA report I saw was kind of in the mid 80% utilization for Midwest refineries, whereas over the summer months, we were very near that 100% utilization level. We'll advance over slide 12 or slide 30 on this presentation. No updates here. This data was because of the government shutdown. I was not able to get the August data, so this is just a repeat of the July data from last month. No changes structurally on what was taking place on the flaring of natural gas in North Dakota as far as the reason why the 4% was being flared. Again, majority of that being burned from locations that have pipeline connectivity. It's just one of several things that's restricting that flow, whether it's pipe diameter, compression, plant availability, pigging. There's several factors, but again, this has been consistent now for quite some time. And that overall trend, sometimes it's always good. I like to step back and see where we've gotten to as a state and as the industry has worked hard to address this. Now, we're getting closer to the new normal than this 4% range. And I know what's happening behind the scenes, very aggressive targets by many of the producers and midstream companies. So I don't anticipate we start to see this growing. I think, if anything, we'll continue to see tightening on this front. As far as new wells getting connected to gas gathering, right on pace. So nothing concerning there. EIA, we noted in September their bearish outlook for that 2026 timeframe. October was very consistent with that. They're still very much remaining on track with an oversupply situation in their outlook for that 2026 timeframe. So again, this changes every month, so we'll see how that continues to evolve. As far as the updated gas processing, no new plants or anything to publicly talk about. I know this is something that a lot of the midstream companies continue to have went on behind the scenes looking at what those opportunities might look like. When we look at residue gas transmission, Northern Border, we've just come out of, just in recent days here, a long extended period of not only maintenance, but some work that was being done on the Bison Express project. So the industry has worked its way through that. I'm not anticipating any other major expansion or maintenance projects on Northern Border for the remainder of this calendar year. When we look at market share, again, still pushing that limit as Bakken Express comes online next year. That will be very much needed and timely access to new natural gas capability out of the region. So we're watching that closely and excited to see that system come online and provide some relief for the basin. No major shifts from that last month's director's cut to today. We're still seeing pretty aggressive ethane capture at many of North Dakota's gas plants. That ethane then being put into the Y-grade streams or purity streams moving up to Alberta. And then no major announcements here as far as any updates on the Bakken East project. Still a lot of excitement that we're seeing across the state, whether it's from the west all the way through central and eastern North Dakota. A lot of very positive feedback from all types of stakeholders on this. So I'll continue every month to keep everybody updated if there's any changes or updates that are noteworthy. And so with that, I think that is the end of what I'll cover here. We can get Nathan back up and we'll take some questions.
We had a couple, we had a couple questions submitted online prior to the meeting. I guess one of them was, what is the status of the oil well reclamation program? We're assuming that this question refers to the initial grant, formula grant. And our answer to that is that the initial grant ends on November 30th, 2025. We've essentially utilized all of the available dollars that were in that program, and we reclaimed approximately 112 sites with that grant round. The formula grant is the next grant round. North Dakota applied for that and received that, and we'll start reclaim work on that in the spring of 2026. So assuming that question related to the grants, but if it didn't, happy to answer any other questions about that. I had a couple questions also on how do you see recent sanctions on Russian oil impacting us here in the United States? And I partially answered this in the earlier, but I would say, almost immediately upon the announcement of the U.S. sanctions on Russia's two largest oil producers, which is Rosneft and Lukoil, oil prices rose about $3 to $4 per barrel. If sustained, this would ultimately wind up as an increase in the price of the Bakken barrel as well. It's expected that the sanction is shorter term in duration to apply pressure on Russia to end the war with Ukraine. There are plenty of articles on that. I won't attempt to speak to all of those, but ultimately it's expected to be shorter in duration. In my opinion, it is short-term geopolitical pressures that are being applied right now and not directly tied to oversupply and demand curve. I believe Justin's slide showed that. Did we show the supply and demand curve?
Yeah.
We can go to that. Kayla, I don't know if you have can you pull up the and this graph is updated by EIA on a regular basis. You can see world production in blue and world consumption in the brown line, and you can see that line has continued to be apart. So there's quite a significant oversupply. I follow an economist named Tricia Curtis, and she's been speaking recently about significant barrels that are on the water. So ships out to ocean or out on the ocean are full, and there's a significant supply of sanctioned barrels out there right now. So this curve is ultimately what really drives the price long term. Most of the others are short term geopolitical answers. The second question was last week, President Trump said that increased energy production is leading to cheaper gas prices. Given our constant production levels and what's happening in other states, do you think that that's an accurate statement? And I would agree with the statement that increased production, and Kayla's going to bring up another graph that we grabbed to support this. So you can see here, this is total U.S. production in thousands of barrels per day. So that's 13.642 million barrels per day in the month of July, and that's continued to increase. So this is historically a high number for the United States. The United States, the number one oil producer in the world. So I do agree with the statement that higher production is leading to cheaper prices. If you're talking just about North Dakota's production, that's on a very slight decline. And again, this is likely due to lower price environment and the activity levels associated with that and the differential that Justin speaks about on his slide. So be my answer to those questions. Are there any others?
Some similar questions online. You kind of spoke to this already, but how do the sanctions affect us in North Dakota? when it comes to price and production? And is there any long-term impact?
Well, I think I kind of answered that. Again, the sanctions are everything that I read on those. They're expected to be shorter term in duration, really aimed at trying to put an end to the war and quit funding the war from the Russian side. If it was long term, I most certainly think that it would increase prices back into the Bakken. Short term, I don't see that happening, but.
Another question, why do you think operators raised the North Dakota rig count while prices are relatively weak?
I think that I think that the raise is a one rig raise, and it may have been a rig down in between getting picked up between an operator that dropped a rig and an operator that picked up that same rig. So I would say that it really wasn't a drop. That's why it's important to look at these trends over time and not just month to month. If we see a trend of a continuous decline over the course of a number of months, I would say I would give more credit to that. I do know of operators that dropped a rig or two in the last couple months, and those rigs got picked up by other operators. So relatively consistent, and I would just say we look at that as a trend. It's important to look at the month over month numbers, but just recognize the trend is probably more important.
One more question online. Where do you see North Dakota September, October production given the current oil price environment?
Justin, you got probably pretty steady to where we're at right now. When you look at the completion trend, that probably more closely ties to the immediate impact of the following month's production. So with the completions being down this month, maybe 2 months from now might show a slight dip, but I would say pretty consistent between now and in October numbers. Justin, do you have anything else to add to that?
We've got a little bit of cautious optimism for the September and October. Maybe a little bit of an uptick. Just talking with some of the midstream folks, they've had some healthy runs. So we'll see. That's just individual spatterings of companies that I work with, but not shoot out the lights type of numbers, but maybe a little bit of strength in that September report. We'll see though.
Other questions?
When we see that that inactive well counts sort of staying the same and the active well count growing, sort of what is it like? What is it price behind that? And where are those? What parts of the basin is it growing, and what parts are they pausing activity?
Yeah, Joey. So I haven't studied that in detail this month, but with that number being consistent, we did take a pretty deep dive into that 2 months ago, and what we found out was that there were wells that were curtailed, really right kind of in maybe central eastern side of the basin, and it's likely that some of those haven't came back online. The total well count continues to grow, just because we have 30 rigs running and we're bringing on that many additional wells per month incrementally. But so the well count's growing. The inactive well count, or I'm sorry, the inactive well count remains pretty consistent over the last several months. I would really say that continues to be a price related inactive well curtailment of production by certain companies during a lower price environment.
Do you think what price would sort of bring those back into production?
Yeah, certainly not what we've seen the last couple of weeks. We've been at $55 a barrel with the North Dakota discount. That's low 50s, high 40s. Luckily, we did not see that last very long. Of course, the sanctions on Russia help prop prices up right now, but it's a hard question to answer, because as you move around the basin, you have different break-even points. Operators have different costs of capital. They have different capital costs that go in. So it really changes widely as you move around the basin. The core of the basin, you can probably run all the way down to $40 oil and still keep rigs in the air. But as you move out to the fringier areas of the basin, it takes a higher oil price or a longer lateral or some operational efficiency to keep up economics at a rate where they want to keep putting capital into it. So if I were to give you a number, I would give you a range, and I would say North Dakota's range is probably all the way from $40 to $65 a barrel. And where a lot of the rigs are right now, just outside of the core, you're probably looking in that 60 range, 55 to 60 range, where, you know, if sustained for a longer period of time, you would have to consider the implications of that. So also important to note that most publicly traded companies are going through their budget cycles right now. Board meetings for publicly traded companies occur in the coming months, and that's when budgets are approved. So it's important to note that those decisions are being made for the following year right now when prices are very volatile. So some companies take a shorter look at that, and other companies are long on prices, and they don't necessarily watch real short-term movement.
Sort of a similar question with flaring and the growing gas oil ratio. What parts of the basin is that taking place in more, and then less in others, I guess?
Yeah, so the GOR situation, it's universal across the basin. So there isn't an area of North Dakota that's not impacted by rising gas oil ratios. What you do see, though, as you get deeper, kind of the central, what people call the tier 1 or the core area, you typically start with higher gas oil ratios and increase from there. So as you get more to the fringe areas, you typically start with a slightly lower initial GOR, but you'll still see rising over time as well. So it's universal that it impacts these wells as pressure depletes. It does, sorry, technical issues here, but yeah. So and then as over time, that same situation and that ramp up is expected across the basin.
I guess just related to sort of both those things, has I know there is like an EOR potential status. There's a lot of talk about EOR earlier or last week here. Like, what's sort of the status of that program? Are there a lot of wells going on EOR status now, or where's that set?
Yeah, we're not seeing a lot of, so I think what you're referring to is the state has the ability, or operators have the ability to put wells after an AB status into EOR status for a longer duration. And I'll look over to Mark and David. We're not seeing he's nodding. We're not seeing a large increase in EOR status wells at this time. Probably because there hasn't been enough time for those wells that they don't need to go on that status. They can still stay on the AB status for a while. As far as EOR in the state, I think we'll cover this in detail at the commission meeting on Monday, but the projects through the Oil and Gas Research Council legislatively approved dollars will be presented to the commission on Monday.
And then we saw that price dip below the revenue forecast. Like, looking ahead, it looks like it's going to continue to be pretty low. Like, but what is there a concern for the state revenue forecast? Like, what do you see from that?
Yeah,
perspective?
I would just say that I was involved in the process of helping come up with that, and I would just say that I'm glad we took a second look at it and lowered it because we're right there. If you're looking at a short-term trend, I could see where you could come up with the idea that price might dip, but like today we're probably above that. So I think, again, we really got to look at trends, and the combination of the volume and the price in the revenue forecast are really what matters. You can be above in volume and below in price, or vice versa, and you're still in a decent spot from a revenue standpoint for the state of North Dakota.
And then last question, I think last night President Trump said he was ending trade negotiations with Canada. Obviously a lot of talk happens, but I guess, like, what's been the impact of sort of these like back and forth trade policies with Canada on North Dakota oil, if any?
Looking at the numbers, I haven't seen any movements. I know a lot of the energy products are exempt through different programs, so I'm not seeing anything noteworthy in any of the trends at this time. But
All for me.
I don't have anything to add to that question, Joy.
I have
Oh,
sorry. I have two more questions that popped in. First one, how do we end up with an all-time high for well count, but steady production?
So, the question is, how do we wind up with an all-time high for well count in the state of North Dakota, but with steady production? And I would just say there's a natural decline to wells. And what you would say is that the number of wells that we're adding in the state, or the rigs that are running, the completions that are happening, are basically keeping the curve flat to very slightly negative right now. And so you can talk about rock quality. You can talk about, where the rigs are. Are they in the heart of the basin? Or are they moved to the fringier areas of the basin? Most certainly, rigs have moved from the heart of the basin out to areas that need longer laterals, and that's why we're seeing the longer lateral trend. 3 and 4 mile laterals make up, what I think I said, 35% of the wells that we permit in the state now. So, as the deepest, hottest part of the basin continues to get drilled up, and there's still quite a bit of good available wells in that area. But as that gets drilled up, operators will innovate, move to the outer fringes, and continue to push the boundaries of the basin with longer laterals and other operational efficiencies. So there's a long answer to that question, but that's probably the way.
Final question. Are there any state policies expected that could affect oil and gas revenues?
I'm not thinking of any right now that are unknown. Do you have anything?
No, I think, yeah.
None that I can think of at this time. I'll keep thinking on that one. That's a good question. Anything else? Well, thank you. Have a good day.